Imagine a world where the most powerful currency in history is no longer untouchable, where the backbone of global finance, the US dollar, could lose its dominance not because of war or inflation or a sudden collapse, but because another country decided to rebuild money from the ground up. That country is China, and the tool it's using might surprise you: gold. For the last several years, China has been quietly doing something no modern nation has attempted before: directly linking its currency to gold. In simple terms, China wants to reinvent how money works. This isn't just a debasement trade or a minor adjustment. It's a massive, calculated strategy that could reshape the global financial system.
Welcome to Doc Does Financial History, where money, power, and history collide, and nothing is ever as simple as it looks.
Here's how it works. Over the past decade, the People's Bank of China has been quietly amassing gold at a pace that no other nation has matched. They aren't just buying gold, they're building the infrastructure to make that gold usable in ways the world hasn't seen since the gold standard. The Shanghai Gold Exchange, now the largest physical gold market on Earth, is at the center of this strategy. They've opened new vaults in Hong Kong, and they're creating what's called the Gold Corridor, a network of secure vaults across the BRICS countries. These vaults allow nations holding Yuan to trade it directly for physical gold. Why does this matter? Because gold is fundamentally different from dollars or treasuries. Gold can't be printed at will. It can't be frozen by foreign governments. It doesn't default. Trust in gold is simple and universal, while trust in paper money can evaporate overnight. And China is building a system where its currency can inherit that trust. In July 2025, gold was officially upgraded to Basel III Tier 1 asset. That means banks can now count gold as fully equivalent to cash or treasuries on their balance sheets. But this is just the first step. The next upgrade, making gold a high-quality liquid asset, or HQLA, would allow it to be used as collateral for loans and financing. In other words, gold would go from being a passive store of value to an active tool for global trade and development. To understand why China is doing this, you need to look at the bigger picture. The foundation of the dollar's global dominance has always been trust. For decades, roughly 70% of all global reserves were held in US dollars, mainly in treasuries. Countries trusted that their wealth stored in dollars was safe, liquid, and sovereign. But that trust began to erode in 2022 when the US froze around $300 billion of Russia's foreign reserves. Suddenly, the world realized that if your wealth is held in dollars, it's never truly yours. It can be seized or frozen at a moment's notice.
The implications were profound. Emerging markets and other nations started looking for alternatives. They began selling off treasuries and shifting into gold. Slowly at first, then rapidly. China's gold purchases accelerated dramatically during this period, publicly visible in a way that sent a clear message. The world doesn't need to rely solely on dollars anymore. To put this into perspective, China officially reports about 2,300 tons of gold, but independent estimates suggest the real number could be as high as 3,500 to 5,000 tons, when including holdings by state banks and sovereign funds not publicly disclosed. This is more than a strategy, it's a statement. But it's not just about accumulation. China is tackling the problems that have historically limited gold's use in global finance. Gold has always been considered volatile and difficult to use as collateral. Under old banking rules, it was a Tier 3 asset, which meant banks could only count a portion of its value on their balance sheets. With Basel III, gold became Tier 1, so banks can fully recognize its value, but it still can't be used as collateral for loans or financing. This is where the Gold Corridor and HQLA come into play. By creating a network of vaults verified by multiple nations, China has solved the trust issue. The gold is geographically decentralized, verifiable, and redeemable. By using a moving average to determine settlement prices, they've also stabilized the value, reducing the kind of daily volatility that makes gold risky for lending. This is an analog system, but it works in much the same way as blockchain. Each bar is tracked, verified, and tied to its owner. With this system, China can effectively fund development in other countries without relying on the IMF or the US dollar. Take Africa, for example. The continent produces roughly a quarter to a third of the world's gold, much of it through small-scale artisanal mining. Under the Gold Corridor system, African nations can deposit their gold in Shanghai, receive loans in Yuan against it, and use that financing to build infrastructure, roads, ports, power plants, without going through Western banks. This strategy solves two major problems: trust and volatility. Other nations don't need to simply take China's word that the currency is stable, they can see and touch the gold themselves. And because the settlement price is averaged over time, the gold becomes a predictable, usable asset for trade and lending. At the same time, the US has recognized the significance of these moves. Earlier this year, the US repatriated large amounts of gold from London back to domestic vaults. The official explanation cited audits and trade concerns, but the underlying reason is clear. If gold becomes a high-quality liquid asset, whoever controls the physical gold has real collateral power to influence global finance. Holding gold abroad leaves the US exposed. Bringing it home strengthens its leverage in a rapidly changing system.
So what does all this mean for the financial markets? Analysts estimate that the recommended proportion of gold in global reserves could increase from around 20% to 30%. Across the global system, that could create roughly $2 trillion in new demand for gold. And unlike dollars, gold can't be printed to meet that demand. The implications for price are staggering. While no one can predict exactly how high gold will go, the combination of scarcity, infrastructure, and new financial utility makes a major increase entirely plausible over the next decade. This strategy also has broader implications for other assets, including Bitcoin. Countries seeking alternatives to dollars could use gold or digital assets like Bitcoin to underpin new financial systems. China is building a physical, collateralized, gold-backed system. The US and Western nations could respond by emphasizing digital assets, stablecoins, tokenized securities, or even Bitcoin as their version of trust and liquidity. What's fascinating is that for the first time in modern history, we might be entering a genuinely multipolar financial world. Previously, there has always been one dominant global reserve currency. Now, there could be two parallel systems, a gold-backed Yuan and BRICS network led by China, and a digital asset and dollar-centric system led by the US. Both systems could coexist, competing for influence, credibility, and control over global liquidity. From a historical perspective, this is unprecedented. For thousands of years, money has either been tied to physical commodities or backed by faith in governments. What's new is the deliberate engineering of two systems at once, each leveraging different forms of trust. Gold as hard, physical, time-tested value, and digital assets as transparent, fast, and programmable value. For investors, this is critical to understand. Gold may no longer be just a hedge or a shiny rock in a vault. It could become the backbone of a new global financial infrastructure. Bitcoin and other digital assets could serve as an alternative, offering transparency and speed, but also competing directly with gold-backed systems. The interplay between these two types of trust could reshape everything from interest rates to commodity markets and even the value of currencies worldwide. In short, China isn't just buying gold, it's redesigning the plumbing of global finance. It's creating a trusted, stable, physical-backed currency that can finance development across continents. And the US, with its own gold reserves and potential digital alternatives, may be forced to compete in ways that have never existed before. This story isn't about speculation. It's about the mechanics of trust, power, and influence in the global economy. Gold is no longer just a relic. It's becoming a living part of modern financial strategy. And how the US, China, and the rest of the world navigate this shift will shape the next decade of wealth, investment, and international relations. So the next time you hear about gold or the US dollar, think beyond price charts. Think about trust, collateral, and the infrastructure that underpins the flow of money worldwide. What China is doing now could determine which nations and which currencies hold the real power in the years to come. The world is entering uncharted territory. For the first time in modern history, nations are not just competing economically, they're competing for the future definition of money itself. Gold, physical, visible, and verifiable, could be the weapon, the shield, and the key. And while digital currencies may challenge it on speed and transparency, the fundamental principle remains the same. Trust is everything. History is being written right now in vaults, exchanges, and corridors of gold. And while the story is complex, the lesson is clear. The future of money will not belong to the strongest military, the largest economy, or the cleverest algorithm. It will belong to the system that countries and people trust the most. And that is why gold, not just dollars or digital coins, might determine who truly holds power in the 21st century.
If you found this video helpful, don't forget to hit the like button, share it with others, and subscribe for more content.